The UAE government's planned launch of its first UAE dirham-denominated treasury bonds is an important step for the country. Fitch Ratings says it's a key enabler of the development of the nascent domestic debt capital market, and it supports funding diversification initiatives. But Fitch says further development is still needed in several areas, and we're joined by the global head of Islamic finance at Fitch, Bashar Natoor. Thank you so much for joining us today. Now, T-bonds will be issued initially in tenors of 2, 3, and 5 years, to be followed by a 10-year bond. How will the T-bonds really benefit conventional banks, corporates, and financial institutions?
Thank you very much for having me, and I think that is the key question to start with, because at the end of the day, the purpose is to develop debt capital markets, but there is other sides that can actually benefit from that. So I think the first thing and the focus is debt capital markets, and with that, you have two sides. First, for banks, they can themselves actually raise funds from that, although the majority of banks in the UAE are deposit funded, but that's another venue for them where they can act and see if there is good opportunities there for them to raise funding. For corporates, it opens the door of being able to tap into a longer debt capital market, because bonds and sukuk usually by nature are a longer term compared to the bank financing that they rely on. And for other institutions, it's not only just a funding tool, it's actually an investment tool. So for banks, it will allow them also to invest in government bonds in local currencies. And that's another advantage that you can buy either as a bank or even as an insurance company operating in the UAE. So these are some of the very quick benefits that you could actually ripe if this steps goes in the right directions.
What do you think still needs to be done then in the UAE to facilitate the debt capital market in terms of regulation, financial incentives, and other fundamentals?
I think the step of issuing is opening the door and is an enabler, because it starts to build a yield curve. But as you know, the capital market has more than one dimension. So it has the issuer side, it has the investor side, it has the regulatory side, and it has the infrastructure. Now, the issuer here, the one that we're talking about currently in local currency, is the government. But the actual potential is to open it for financial institutions and non-financial institutions. So you need to have the right incentives to make these participants enter into the market. So this is on the issuer side. On the investor side, now the dirham is pegged to the US dollar, and that by itself is an advantage because it minimizes the currency risk for issuers and investors, and that is by itself is a big tick box. But you need to have the right proposition to intensify, to make the investors approach such a market and participate in such a market and build that investor base. You could actually potentially build a local investor base. You could potentially build a retail investor base. So the actual steps towards that is also still big that you can do. In terms of the infrastructure and regulations, you need to have the right regulations, and you need to have the right agents, you need to have the right brokers, the intermediaries, and you need to have the right transparency level and the right information disseminated in the market in a way that it makes it transparent, attractive, and build confidence eventually.
And Fitch also says that the corporate lending culture in the GCC is really a hindrance to DCM growth. How so, if you could elaborate on that?
Perfect, because currently in the GCC and in the UAE, corporates rely on banks' funding, which is easier and faster. So why should I go? The question that comes to corporates, go and bother and go the extra mile and do additional reporting and disclosure and maybe time and cost to issue a bond or a sukuk, where I can have a direct bank lending. This culture, this mentality, and this way that the corporate has been funded is gonna slow down this progress unless we have incentives and more attractive points and traction points to allow these corporates to enter that market. And this is why we think it's currently a hindrance, but that's not the case in the UAE and GCC. All markets that started developing their capital markets where they had this issue, and it was overcome in various ways depending on that government strategies.
Now, in the UAE, the size of the DCM reached $245 billion in Q1 this year. How much do you expect this market to grow in the near term?
It's been growing in the past 2-3 years in almost double digits. and that is something in all currencies. Now we have a new, I would say, comer, not new, but relatively new comer with more thrust in it. So I would say in the near to medium term, we expect that trend to continue, and we expect this market to contribute more to the funding story of corporate financial institutions, and maybe also by issuance from the government, but also to have the private sector participate more in the growth story that is going to come in the coming few years.
We certainly hope so. Thanks so much for joining us today.
It's my pleasure. Thank you.